Here comes video on Sunday, the 10th of December, 2023, just gone 9:03 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Do hope your trading is going well. I have to start this video with a massive apology. I was seeing Rambo signals going off on a whole bunch of charts last weekend, and I was making a big deal about it and saying, watch out, all these Rambo signals are popping up. And I got a bunch of emails after that with people saying they didn't see the same thing that I was seeing on my charts. Turns out I've got a corrupted data file on TradeStation, and that was causing a lot of these Rambo signals to pop up. So I want to talk about data corruption and how to fix it on TradeStation. Luckily for me, I don't think it's a problem that kind of comes up more than every year or 18 months. Normally, if you look at a chart and it looks a little funky and want to check it, on TradeStation what you do is hit Control R, and that re-downloads the data for that chart and recalculates the signals on your chart just to see that you might have something wrong. And after getting the emails about the Rambo patterns, I also saw some odd things in my yen charts. And so I just hit the nuclear option and basically deleted the old data cache and re-downloaded a new one. So this is a useful article on the Emini-Watch website. It's called TradeStation Charts, 20 Tips, Tricks and FAQs Answered. And there's a list here of 20 different tips and tricks. Number 16 is how to clear the TradeStation cache. Cache, not sure how you want to say it. I like to say cache. So there are instructions here for both TradeStation 9.5 and TradeStation 10. And essentially what you're doing is you're shutting down TradeStation, you're finding this old cache, you're renaming that cache file, and then restarting TradeStation and opening some of your charts. And what that does is it forces your version of TradeStation to go back to the TradeStation servers and re-download fresh data for your charts, starting afresh, if you like. So I can understand TradeStation data getting corrupted on tip bar charts, because with tip bar charts you need the full stream of the data coming down, and if you have little micro outages in your internet connection, it's possible to drop some of those trades, and so that historical tick data can become corrupted, for want of a better word, because it's missed some of those trades coming through. This seemed to be on higher time frame charts, minute charts and daily charts, and my understanding there is the data is refreshed very infrequently or less frequently than tip bar data, certainly. So I'm not sure what was going on there and causing me a problem. Unfortunately, I don't think there's an automated way of being told that you've got corrupted data and to re-download data afresh. When there are data corrections, yes, in TradeStation you are notified about those and you can refresh your charts, but not if your whole historical database is starting to look a little strange. So apologies for that. I'm just going to roll through those charts for the Rambo patterns and show you what we actually have with the correct new data. And we're just going to look at the high level markets first. We're going to look at the E-mini, the S&P 500, the NASDAQ, the Dow and the Russell. And we've got three different charts for each of those markets. So we've got the futures markets, we've got the index themselves, and we've got the ETF. So this is the E-mini, which is the futures market, and the S&P 500. No Rambo pattern here. Next one down, which is the index of the S&P 500. Again, no Rambo pattern up here. But on the SPY, the SPY, which is the ETF that follows the S&P 500, yes, we do have Rambo patterns starting to show up there. So that's one. Then NASDAQ futures, no Rambo patterns there. However, on the NASDAQ index, we do have a Rambo pattern. You can see that's just hidden behind that flush signal up here at those highs. So that's a second. And then a third here with the Qs. So this is the ETF that follows the NASDAQ index, also generated a Rambo pattern at those highs. The Dow, I was seeing Rambo patterns on these markets, and those were all false. So yes, we had amateur up bars into those highs, but weren't breaking to new highs, and that wasn't actually generating a Rambo pattern up here. So that's the futures, the index, and the ETF when it comes to the Dow. No Rambo signals there. Lastly, the Russell, none here on the futures, none on the index, and none on the ETF. So last weekend I was seeing Rambo signals on 3 of the major market indices, and it turns out really there's only 2. The NASDAQ, yes, definitely showing us Rambo patterns up at those highs. And when it came to the SPYs as well with the S&P 500, we also got a signal there. So for me, not as important as I was stressing in last weekend's video, but still it is there. It is showing that this move that we're having at the moment is running out of steam. And as we go down the E-mini charts to the lower time frames, we've also got some Rambo patterns showing up this weekend after this week's activity. So here we go. This is the daily chart. The E-mini was still on an uptrend, and still with this week's activity, we just pushed higher and higher, and now we're breaking above the resistance on the intermediate time frame. Still in confirmed uptrend with the background in red, and we didn't get any significant weakness this week. 135-minute chart here. There we go. We've got our resistance on the highest time frame here. The background's in red. Confirmed uptrend. Nothing in terms of exhaustion patterns up here or blue professional bars on the 135-minute chart. Then down to the 45-minute chart. Here, again, more Rambo patterns. We're starting to see up these highs. So a couple of weekends ago, we had a whole series of Rambo patterns leading us into those highs. I said, remember, the low of the amateur bar of that sequence is the important level that needs to be broken. We can have new moves being driven by the amateurs with Rambo patterns that don't turn into reversal. It just means that we're going to run out of steam because it's just amateur activity there. And then we had some professionals taking profits up here, pushed us to new highs, and then we've broken to new highs with more Rambo patterns up here. So the low of that amateur sequence there is 46.44. Last weekend, I think I was talking about 45.45 as being the important level, but remember, we have had the rollover in the E-mini this week, which means these numbers don't correspond. We've got a continuous contract here, which has changed some of these numbers, but the low of last weekend's activity is the significant one that I was talking about, and that level pretty much corresponds on this new E-mini futures contract to about 45.95 here. That level being broken is really significant, and as the first target to get broken here at 46.44, look at that and see that's an area that we might look to start shorting the market. So background still in red, which means confirmed uptrend in terms of price and volume. You can see the price bars here on Better Sine Wave are all printed red, which shows we're in an uptrend and we're above the trailing stop on Better Pro Am. And then lastly, the 15-minute chart, and again, more amateur bars, Rambo patterns after Thursday, Friday's activity here. This was super volatile. This was after, I think, Thursday's employment numbers came out. The market went a little bit wild and then kept on pushing higher and higher here with amateur up bars. I do adjust for the rollover on the futures market by using the equals 106XC because TradeStation, I think, rolls data on the wrong date. It rolls a day earlier where the volume is still going through the old contract, and so I choose to delay it by a day. And even with that activity, we still had amateur bars, up bars here with Friday's activity into those highs, showing that it's pretty weak and we're overextended here with all of our end of trend moves up here at these highs. But who knows what it's going to take to break this market into taking profits and just having a little bit of a some weakness. Background still in red here with uptrend, confirmed uptrend for both price and volume on the 15-minute chart. Then lastly, let's go to the 13,500 tip bar chart here. So after a big number being released, an employment number or something like the Fed minutes being released, we often get a lot of amateur bars in that volatility as the market's just being pushed higher and lower easily because the average trade size is super low. And into those highs, Rambo patterns there. I didn't find many tradable trend moves on the E-mini this week, but we're up at these highs, amateur bars leading the way, but still in a confirmed uptrend with the background in red. So this week, in my mind, we've trailed up the number that needs to be broken before we see significant weakness. And if it's not this number here, the 45.95, which is the low of the previous week, it will be the low of this amateur bar here, 46.44. So that now in my head is a very significant number, and let's see if that's going to get broken at the beginning of this week and we get a little bit of weakness from there. So we go, those are the E-mini charts. Let us look at some tick bar charts and some triple signals. We'll go through the Forex charts first with the euro. And despite us having a pretty strong move down in the euro, we did not get a signal short 2 weeks ago. Yes, it was overbought. We had blue professional bars and we broke the trailing stop, but it did not come with any exhaustion patterns. We didn't have exhaustion by bearish divergence to lead to this decline, so that's unfortunate on the euro. But I think we did on the British pound. Yep, there we go. Beginning of this week, there we go. Bearish divergence, break the trailing stop, and we're in a downtrend on the British pound. And the Aussie dollar, Aussie dollar, the signal's coming a lot later this week, and that's because the overbought signals didn't signal up here at those highs. So it's a shame there, but we are in a downtrend on the Aussie. Under the lip here, no blue professional bars or exhaustion patterns coming on the lows, so still in the downtrend on the Aussie. And the Japanese yen. Japanese yen was super interesting this week. So we got a signal at the end of last week, come back into these lows. We're oversold with the background in red, and then the blue professional bars starting to come in at the lows here, here, and here. We break above our trailing stop, and then we had a nice runaway move into these highs, but didn't really come with blue professional bars, those highs or exhaustion patterns, so we didn't signal a short signal. Now we're coming down and blue professional bars are starting to set in here at 69. Let us see if that's a level that holds this week. So that's Japanese yen. E-mini, last week we had this signal short, didn't go anywhere, didn't really come with an exhaustion pattern at the highs and blue professional bars, and this week's been pretty junky, but we did get a signal at the end of this week, signaled long, only one blue professional bar down here on the 13,500 tip-bar chart, so not sure about that. On the 10-year notes, they have been pretty weak after those employment numbers here. Didn't signal, again, because we didn't have exhaustion buy, a bearish divergence. We just broke the trailing stop on Better Pro-Am, and there's the blue professional bars selling it down. So that's on the 10 years. Then gold. Gold raced away to these highs, and that's the exhaustion buy pattern there with a whole bunch of blue professional bars, 2140, taking profits here. Would have been a great signal, but we never got bearish divergence. We need a bearish divergence signal. That's just an overbought signal. Background is in grey, showing it's overbought in terms of price, and we break the trailing stop here, bang, we're in a downtrend. But it is starting to signal long at the moment. We've got blue professional bars coming in at those lows. We've got exhaustion patterns here to turn around again. So let's see if gold finds somewhere to hold this week. Silver this week, yeah, we tried to hold with the signal there, but wasn't enough. We needed to come back down here. That signal was based on exhaustion, sell bullish divergence here, and that was kind of getting the move going. But now we've got exhaustion, sell bullish divergence starting to come in at these lows. We've got to see some blue professional bars though before we start to signal long on silver. And Bitcoin also got up to 45,000, and now we've started to roll over. Here's more of a classic pattern: exhaustion buy, bearish divergence, blue professional bars at the highs, overbought, and that's why we get our triple signals short. We come back up, we're under the lip, so around this low, the 43,000 level. That's super important. See if that holds this week. And then crude, crude sold off heavily from the 79 level last week. We had a signal at the end of last week, and it continued down and down. Down here though at 69, we've seemingly held a little bit with some blue professional bars come in, but the exhaustion patterns are based on here. Those are getting the move going, they're not ending the move down here. So although it's signaling long, it's a little bit too early for my likes there on crude. Natural gas continues to weaken, and our signal's trying to find an area where it's going to hold. This might look a little bit better down here. We've got exhaustion, sell, bullish divergence, blue professional bars coming on the lows here. So we need to get back above 260 to break into an uptrend on natural gas. And then copper. Copper signaled a couple of trades. Beginning of this week, we had a signal short, bang, bang, bang. And then midweek, we had signal long, exhaustion, sell, blue professional bars come in, oversold. We break the trailing stop on Better Prime, and bang, we're back up on copper. And then the ags. I think the ags have been pretty weak this week. We had signals this week short. After those patterns, we need the lows of those blue professional bars to get broken for a confirmed signal here on corn and soybeans. A signal long actually midweek here. Exhaustion, sell, bullish divergence, blue professional bars at the lows. It's still moving backwards and forwards here, trying to hold that level. So see if we break back up through that trailing stop on soybeans. And lastly, a wheat. Wheat, there we go, signal, that's a nice one. So exhaustion buy, blue professional bars at the highs. The bearish divergence comes in, we're overbought, and we've broken the trailing stop on Better Prime. Bang, we've turned down there nicely on wheat. So the seasonal pattern that we've been working our way through, which is the Thanksgiving strength, the 10th of December is when that typically on average runs to, so that's today. So let's see if we get a little bit of weakness from that. Things will start to get a little bit more quiet as we move towards Christmas, but I still think we're going to have a decent trading week this week. And let's see if we get those levels broken on the E-mini and get a little bit of profit taking and some nice trending moves to play to the downside. Anyway, so I hope your trading is going well and looking forward to next week's trade.